45 years of age who kind of wake up one day and say, is this all there is? I'm just going to do this for 20, 30 more years? And they're moving to do purpose-driven companies. I interviewed Scott Ullum, the CFO of Edwards Life Sciences, as an example. Used to work in investment banking, decided he wanted to go work for the largest maker of heart valves in the world, based both in Singapore and Orange County, because he said, I want purpose in my career. I want to know that I go to work every day, I'm helping to save lives. I'm helping to make sure that people don't lose their grandfather or their father or their mother to heart disease. So there's, I think, and if you look at Edwards Life Sciences, if you look at Salesforce, and you go to your Bloomberg terminal and run their long-term performance, they're extremely profitable companies. Mark Benioff, the founder of Salesforce, is a billionaire. Many times over, but he said the number one thing he did with recruiting is to say to people, you can come to Salesforce, you'll make money, but you also will make the world a better place at the same time.
So you were saying, I mean, purpose can be a really powerful recruiting tool. And this is particularly important to millennials. They ask the question, what are you doing with your company? What do you stand for? This is a change, right? So what's changed in the ecosystem? Because, you know, we weren't asking these questions when we applied for jobs many years ago. So what's changed in the ecosystem that this has become important now?
Well, I think what's mostly happened is you have a group of people growing up who don't want to live two lives. They don't want to be told, go to work Monday through Friday, 9 a.m. to 6 p.m. and focus on profitability. And then if you want to be a do-gooder, you can do that at nights or on weekends. As Suzanne DeBianca at an address at the World Economic Forum in Davos said, she's from Salesforce, she said, people don't want to live two lives. They want to bring their whole selves to work. So Salesforce, as an example, gives every employee 7 days off per year to go volunteer for something they believe in. Atlassian, the Australian software company that IPO'd, making billionaires of its co-founders, Scott and Mike, basically said, we're going to win the war for talent by telling every one of our potential employees 1% of the company's equity is going to a foundation. Right? We still get to keep 99%, but that 1% was not giving anything away because it was being used as a recruiting tool. And of course, great code doesn't write itself. If you're in tech, you have to have the best and the brightest. Another good example of this is Elon Musk.
Right.
Young people are lining up to work for Elon Musk because he's talking about making electric cars cool, making them sustainable, having zero carbon emissions, not putting money into the hands of the petro dictators, giving us cleaner air. And so when you hear Elon Musk talk, Elon Musk does not talk about revenues, EPS, market share. He talks about things that are very purpose-driven. SpaceX, very purpose-driven. And here's a guy who's winning the war for talent on multiple fronts, 4 different companies. But when he talks quite a bit about the bold vision and the purpose. And guess what? He's also, and his shareholders are doing very well at the same time.
Yeah, so there's real resonance in there. I want to get all of you involved. I know you're eating, but we do have a poll and a question for you. We've been talking about how you really make purpose part of a company's DNA. So I'm going to ask you to take a minute to respond to our question, which is, when it comes to purpose, where is your company? Do you not have a strategy around it? Do you have a strategy? Is it enough to have CSR? What are you doing? Where does your company stand? So please take a minute and respond to the poll. And while you do that, we'll come back to the results in a few minutes. But we are seeing some results already.
I think that means we have 4 votes. There we go. Now we have 5 votes. Now it gets interesting.
Okay, we're going to give you a few minutes while you do that, and we're going to continue chatting. Purpose is embedded in our company DNA. That's leading. That's great. How do you do that? How do you take purpose away from just being something that the CSR department does and really make it part of a company's core DNA?
I think the most important thing is to, from the top, at the CEO and management team level, to say this is something we firmly believe in, keeping in mind it's not giving away the store. We're still going to have a very successful company. Polling the frontline staff to figure out what issues are they passionate about. So you're aligning yourself with causes that your employees and your customers also care about. And I think it's really important then to measure it and report on it and celebrate it. That if your company decides if you're a medical company and you decide you're going to do something where for every product you sell, you might have a social outcome attached to it, you report on that and you celebrate it so people see the momentum, see the data, and stay very, very excited about it.
And the other question I wanted to ask you about it, when you said if you do something right, you can celebrate it. We live in the age of social media. That's played a huge role, isn't it, in getting the message out about companies doing something right and purpose-driven? So what role has social media played in this?
I think social media is interesting because I'm sure many companies in this room have spent hundreds of thousands of dollars trying to figure out social media. And I think the reality is social media is both a microphone and a mirror.
Yeah.
People can only talk about the stuff that companies give them to talk about. So a company is doing good for the world. So we have a partner, for example, Tatcha, a skincare brand, where every time they sell one product, they donate $1 to Room to Read, so one girl goes to school for one day somewhere in the developing world. And their customers love that. They've now sponsored 2 million girl days of schooling. And their customers buzz about that on social media. Their scores on social media are off the charts. But I said again, it's a mirror and it's a microphone. If companies are doing bad things for the world, then consumers are going to talk about that. I mentioned in the book, I tell this story about Mylan Labs, if people remember the EpiPen scandal. Or people may remember Volkswagen spending millions of dollars taking out ads talking about their sustainability, but then 2 weeks later it turns out the news breaks that they've been cheating on their diesel emissions. So I think companies have to mean it, they have to own it at a high level, and the reward they'll get is that they will look good on social media. So WestJet is an example. If people know the Canadian upstart airline WestJet, they do an annual thing called the Christmas Miracle, where they challenge their employees to go do one miraculous thing around Christmas, but it's multiplied across thousands of employees. Their videos have been watched over 75 million times on social media. 75
million views.
75 million views. Now think about how much you'd have to pay if you wanted to get paid media or earn media. This is viral, it's free of charge, and it's one more way that a company was smart about purpose. They said we can do something very small that makes our community a better place, but that will get our customers very, very excited. Now keeping in mind, 75 million views, and they're only a Canadian airline. They don't even have 75 million people in Canada. That shows how the video went viral globally.
So it does resonate with people around the world. I mean, purpose is...
I think it does, because I think that people... Look, I'll use this room as an example. There's probably a lot of people in this room who are more successful than they ever expected to be. I certainly was lucky that I was born a middle-class kid, and I've been fortunate that I've been more successful than I ever thought I'd be. But at a certain point in life, you get to the point of saying, is this it? Is this all there is?
Right.
And you want to be able to know that your life stands for something. You want to be able to know that your company stood for something. When you see bad news, and we live in a world where there's lots of bad news, and there's lots of negativity, and, you know, my country's president is creating a lot of negativity, and it can be depressing to read the news. And then you can go and say, well, what if business can be a force for good in the world? What if we say every single company is going to have a social mission? And yes, they're still going to make money and do very, very well for themselves. I think that makes the world a more optimistic place and a more hopeful place. I believe that every one of you in the audience, and I believe that you and I were put on this earth to do more than just make money. And what I would like to be able to do late in my life is to say, we left a legacy. We proved that capitalism could be a force for good in the world. And what's really cool about it is it's a great way to get your kids involved. If all you care about in your business is profitability, your teenagers don't even want to hang out with you. If you say, hey, our company's doing things like libraries like you see here in Cambodia, it's a great way to bond across generations. So I think it's ultimately a win-win-win. You create a better company with more motivated employees, happier customers, you stay on the right side of regulators, you create a better world, but also you create a better you. And that to me is the most important thing, because every one of us is going to face that moment, our last day on earth, where we ask ourselves, what was my life all about?
Yeah.
And nobody ever put on their tombstone, she cranked out 28 consecutive quarters of earnings per share increases, right? What will you be known for? You'll be known for whether or not you made the world a better place, and will the world remember you after you go?
I'm going to take you back to that trip when you went trekking in Nepal. I mean, walk us through that decision. You were 35, obviously with dreams of becoming even more successful at Microsoft, and to give all of that up. Was that a tough decision, or did you just know at that moment that this was it, you wanted to do something different?
I think for me, the biggest moment in Microsoft, when I saw 400 kids, and I saw an empty library. And I thought, these kids have lost the lottery of life. They were not born in Hong Kong, where I live, or Stockholm, or Geneva, or Singapore. And they're being told at age 5 or 6, you've lost the lottery of life, you'll never get educated. And you think about the raw potential that's there in kids and in human beings. And those kids are told at age 5 or 6, you've lost the lottery of life. It's totally random, born in the wrong place at the wrong time. And I thought, we got to unrandomize this. We have to de-randomize access to education. So, and I think that every great entrepreneurial journey starts when a founder says, this can't be a hard problem to solve.
Right.
I thought there's a library, there's teachers, there's empty shelves, this can't be a hard problem to solve. That was our first library in 1999. I am proud to say that through the power of building purpose-driven partnerships, we've now opened 20,000 libraries in 15 countries. They serve 14.2 million children. And that's just from a standing start as a young upstart social enterprise. We're going to blow those numbers away in the next 5 to 10 years, and purpose-driven partnerships are one way we're going to do that.
Let's take another look at the poll results and see where we stand. And let's see how many people really believe. Look at that.
Wow.
That's impressive, John.
Great.
Did you expect that?
No, that's actually much higher than I expected. But that gives me hope. I honestly believe that capitalism can and should be a force for good in the world, and I do hope that the 41% who were on the other three categories will hopefully try to move towards where it's embedded into the DNA.
There's a 5% group here which said that they have no strategy around this. So if I gave you 1 minute to convince them that they should have a strategy around this, what would you say to them?
Well, and I would address all three of those categories. No strategy, the minimum required,
Right,
which to
okay.
me seems a bit cynical, and even the CSR department. When I was at Microsoft back in the 1990s, we had a debate about whether or not we should have an internet department, because at the time Microsoft was way behind Netscape and way behind IBM. And we basically said to ourselves, if we have to have a department of the internet, it means we don't really get the internet. We need to embed the internet in every single thing we do.
Right.
10 years ago, if you asked an executive if they had a social media strategy, you'd forgive them if they said no, because social media was still new.
Right.
Today, however, if they didn't have a social media strategy, you'd question their competence. I believe the coming decade is going to be a very purpose-driven decade, and when somebody asks an executive, do you have purpose embedded into your DNA, the answer should be yes, because if the answer is right now not yes, they're already behind, but those companies will get further and further and further and further behind as the millennial generation grows up, acquires positions, acquires wealth, and tries to judge the companies they do business with, and they avoid the companies that they feel are not making the world a better place.
And when you find companies are driven by purpose, do you find that it has a ripple effect? Say, a company that is in partnerships with other companies, or does it extend into the supply chain and create a bigger ecosystem of purpose?
I think the smartest companies try to figure out how do they get purpose, not just embedded in their company, but how can they then also bring their business ecosystem in.
Right.
We're way past the old days of vertical integration where like Ford's River Road plant, Ford just owned everything.
Right.
You look at Apple and the number of suppliers they have involved in sourcing and creating an iPhone. There's a huge opportunity then to say, let's extend purpose not just to our employees, but actually get our suppliers, our vendors, our customers all involved and do this as something, just to be able to do something even bigger by bringing your ecosystem in.
Wonderful, great. Thank you so much, John. Always a pleasure to chat with you.
Great, and I do have books available if people are
Yes,
interested.
John does have books outside, so if you want him to sign books, he'll be happy to do that for you right outside. Once again, thank you so much, and here's to more purpose-driven businesses and partnerships.
Thank you very much. Thank you.
Thanks.
Please welcome Bloomberg Economics economist for ASEAN, Australia, and New Zealand, Tamara Henderson.
Good afternoon. So I was asked to provide an economic story for ASEAN with a bit of a spotlight on Malaysia and do it in 10 minutes. So I'll do my best here. So we're shining a light more strongly on Malaysia because of this recent election outcome that we had there. That created quite a surprise to see the incumbent government party of the last 60 years thrown out. And that has sparked a lot of interest in the country and also spooked some of the investors. So I'm going to talk. I have about 10 minutes, so I'll just briefly take us on this across the region, looking at ASEAN, and then focus on Malaysia. So I have to give a bit of a short shift to the whole region. Of course, ASEAN is a member of 10 economies. I'll just be focusing on the big five of Indonesia, Malaysia, Philippines, Singapore, and Thailand. So growth, we're hitting the big spots. So growth, most of all in the ASEAN 5 economies in the first quarter of this year, were growing faster than their 10-year averages. And that's quite an achievement, but also to note that momentum was also picking up in the first quarter. Now, for most of these economies in the ASEAN 5, that was down to stronger investment, but also weaker headwinds from imports. What about momentum in the second quarter? We don't have those official data points yet, but if we look at all the smaller indicators that GDP numbers are based upon, it's looking like the region had of course, a little bit softer exports again, but firmer domestic demand. Now, if we also look ahead for the second half, which is what we hope to do, we're always trying to look forward. Of course, we've got trade war talk turning into trade war action with the United States and China. Now, so the second half was already going to look a bit more challenging anyway. We have the global business cycle moving into a more mature phase, aided by tighter monetary policy in the major central banks. But now we've got trade war actions coming to a head. Of course, that's going to be hitting exports. U.S. tariffs on China's goods is going to mean less demand for ASEAN exports of intermediate goods, for sure. At the same time, though, we've got China putting on its retaliatory measures, and that's probably going to mean that Chinese consumers are going to be looking for alternatives to higher-priced U.S. products, and that could actually benefit some of ASEAN's suppliers of those complementary goods. So how this all balances out is going to depend on the country in question. So if that's the export story. Of course, there's going to be spillover into investment. And a key aspect for just how much this is going to hit investment, I think, is going to have a lot to do with how midterm elections in the United States pan out. This could be viewed as even a referendum on Trump's trade policy, which will be coming to a head for consumers right about that time. So if Trump's party does badly in the midterm elections, we might be able to say that investment could be saved. There wouldn't be the worry that these supply chain shifts could be more permanent. But if the Trump party does get a thumbs up on midterm elections, we would probably be looking to see investment flows reflecting the expected shift in supply chains. Of course, there's also the nearer term volatility in financial markets, which creates greater risk and uncertainty for investment as well, acting as a stumbling block. So altogether, this suggests, in terms of growth, softer growth in the second half of this year, if not for the year as a whole. Turning to inflation, of course, inflation is creeping up. That's not just in ASEAN, but it's a global phenomenon. And within the ASEAN 5, inflation is higher in its more closed economies of the Philippines and Indonesia. Now, this is where there's also been some downward pressure on the currencies. On a trade-weighted basis, the peso in the Philippines and Indonesia's rupiah are weaker, whereas the others are actually stronger compared to trade-weighted, their trading partners over the past year. Now, of course, much of this increase in inflation comes down to cost push from oil. Oil is about 66% higher than it was a year ago, although we are seeing some of this effect being mitigated by governments putting subsidies back and putting on some price controls to maintain spending power. So what about the second half? We could see actually food prices become another source of cost push inflation in ASEAN as a result of China searching for alternatives to higher priced U.S. agricultural goods. But of course, central banks, well, that's on my next slide. What's important for central banks and monetary policy is actually how those cost push get fed into the broader price basket. And it's looking in the region that demand pull pressures seem to be still limited in most cases, the exception being the Philippines. And even though we've got this demand pull still being a bit quite muted, even though growth is above trend, but we're seeing evidence of this in the measures of core inflation, which still remain quite subdued. So altogether, this could mean, if central banks, in theory, as we learn in school, in Economics 101, is they can justify looking through these temporary blips in inflation caused by these cost push factors if they're not worried about spillover. And my story that I'm spinning here is that actually those demand pull pressures don't look so bad. And actually we've got the second half of the year looking a bit softer on growth as well. Well, guess what? Well, the central banks in 4 of the ASEAN 5 central banks have actually already started tightening monetary policy, Thailand being the exception. So we've got, I would argue that these central banks are tightening for different reasons. In Indonesia, we've had 100 basis points now of rate hikes, even though growth there is below trend, actually even maybe below potential a bit, and inflation is low. Well, the issue there is, I think, the rate differential. It's just gotten a bit too low to compensate investors for the risk taken with the yields. Now that the Fed, we've got quite a succession of Fed hikes under our belts. It's a bit different in the Philippines and was different in Malaysia. It's changed a bit in Malaysia. We've got quite strong growth. Well, we've got quite strong growth in both the Philippines and Malaysia, but that strong growth is actually spilling over into quite strong inflationary pressure in the Philippines. So central banks there have been acting to anchor or try to re-anchor inflation expectations. In Singapore, we also had tightening of a different sort on the currency, and I would say I would argue that the motivation there was to be a bit more proactive and more of a normalization of monetary policy. So what about for the second half? Well, probably the Philippines and maybe Indonesia have a bit more work to do on raising interest rates to get their goals, currencies stabilized and inflation stabilized. So now with the last bit of my time, I'll just turn the spotlight on Malaysia. I mentioned, on the consumption story is quite strong in Malaysia. Although it was a bit slower in the first quarter, it has remained quite impressive. Consumption was rising almost 7% year on year, and that's about 2 percentage points above the ASEAN 5 average. For the second quarter, it looks like consumption might have softened a bit from there. Of course, we had elections in the middle of that quarter, so that if we take softer spending in the first half of that quarter and stronger after elections, we might end up with a stable growth for the second quarter. But for the second half, and this is where the new government comes in, we would expect this consumption to possibly even pick up from where we are. So yes, 7% if not higher. And what we've got boosting household spending in Malaysia are a couple of key policies that the new government has put in place quite quickly. They scrapped their 6% GST on the 1st of June, and their replacement tax to fill that revenue gap is not going to be introduced until September. And when that replacement tax is introduced, it looks like it's going to be imposed on a narrower tax base. So we've got that boosting spending, especially probably in the third quarter. Basically there's no tax at all in that quarter. So all these high-priced products will probably see quite a pickup in demand in the third quarter. We also have fuel subsidies being reinstated in Malaysia, so that's protecting spending power. So even though we've got this quite strong consumption story in Malaysia, we're not really having to worry much about inflation because of the way this consumption is being driven with the cut in the GST and the price controls. So on the export side, I've talked about the exposure generally in ASEAN, but within the region, Malaysia is much more vulnerable to U.S. tariffs on China. Malaysia's net exports to China amounts to about 5.5% of GDP, which compares to about 0 for ASEAN as a whole. And our house estimates suggest if we see U.S. tariffs on $250 billion of China's exports would probably translate into a hit of about half a percentage point of growth for China. That happening, we would still expect Beijing to offset that a bit with a combination of subsidies to support consumption and higher infrastructure spending to support investment. So while that hit to China's growth could be mitigated, the impact probably won't, those support measures for growth won't probably do much to underpin China's imports of intermediate goods. But fortunately for Malaysia, as an oil exporter, an energy exporter, it's still able to benefit from this run-up in oil prices. Now, to what extent we see oil prices remain underpinned remains to be seen as this trade war escalation actually starts to hit the economic data and spook consumers and investors. So on the my last comment is on investment in Malaysia. As I mentioned at the start, much of the pickup in growth in ASEAN in the first quarter was due to investment. That actually was not the case at all for Malaysia. There was essentially no increase in investment in the first quarter despite actually firm oil prices. Now, probably the approach of elections had a lot to do with that. So going forward, what do we expect in the second half? Well, we've got a couple of key concerns for investors. One is, of course, a new government brings uncertainty, and one key question is some of these reports in the media of higher expenditures and less revenues have led to fears that there's going to be a big fiscal gap, and so we'll have to wait and see how the government actually, how much it plugs this hole, and whether it demonstrates a credible commitment to bring that gap into line, to consolidate it. Another issue for investors is that the government has suspended its infrastructure projects. So big questions are, well, how many projects will actually be canceled, and to what extent will the involved parties be compensated for work already in progress? So until these questions are resolved, investors, I would expect, would remain quite wary. So, but my reading of the central bank's statement yesterday, Bank Negara Malaysia, is that the new central bank governor seems to think that we're going to have more clarity, or much more clarity, for investors in the second half from the Malaysian government, and that clarity will be viewed positively by investors. So we'll have to see about that. So just to wrap up, as 2019 grows closer, we've got many challenges, some shared by all countries and some specific to Malaysia. Of course, global challenges are lower growth, higher inflation, greater risk, and higher borrowing costs. Those more specific to Malaysia being regime change uncertainty. As I mentioned, that's a challenge for all new governments, and that should ease over time. And I think we should keep in mind that this new government has been in office only about 2 months, and it has hit the ground running. Also, we've got greater sensitivity to China. That's not a problem when China is growing like gangbusters, but of course that sensitivity is a problem when China is slowing. And just to end on a positive note, working in Malaysia's favor at the moment is a buoyant consumer base and firm oil prices. So thank you for your time, and I realize this was quite brief, so if you have any questions, please feel free to reach out. Thank you.
One of the world's largest search engine firms has turned its attention to the high seas. I'm Carlos Salno, and I cover economy and politics in Indonesia for Bloomberg News. In a global first, Google last year partnered with Indonesia to use satellites to spot illegal fishermen from space. This comes after Indonesia's Fisheries Minister Susi Pujiastuti reached out to Google and the Global Fishing Watch program. The locations of thousands of vessels that were once invisible can now be seen online. By using machine learning and tracking ship movement, Google's technology is able to establish patterns and determine whether a vessel is in transit or fishing. Though Pujiastuti's methods have gained sophistication, she's also blown up ships in the past in her bid to clean up the industry. one thing's for sure, her efforts are paying off. An industry plundered by foreigners for decades is once again contributing to economic growth. The country's fish stocks have more than doubled in 2 years. In a sprawling archipelago of 17,000 islands, the potential is vast. But with almost 34,000 miles of coastline to monitor, the Minister and her partners have a big job ahead of them. I'm Carlos Salner at Bloomberg News in Jakarta. You can follow me on Twitter at Carlos Salner, and you can get all your updates at TikTok.
Please welcome Colin Graham, Chief Investment Officer, Multi-Asset Solutions, Eastspring Investments. Tu Nguyen, Managing Director, Forum 1, VCG Partners, Vietnam Fund. Dr. Pakon Pithatwachai, President, the Stock Exchange of Thailand. And Bloomberg's Executive Editor for Global Markets, Madeline Lim.
Good afternoon, everyone, and welcome to the Investing the Year Ahead for Investing and the global outlook for global and regional markets. We are going to attempt to cut through all the noise and the tweets and tell you what you need to pay attention to in the year ahead, the fundamentals, the drivers, the stories that we are going to be telling. And so to start out, we want to sort of frame the year ahead, the coming months, and what the risks are, what the drivers are, what the outlook is. And for that, I'm going to ask Colin to speak to us a little bit to paint that broader picture.
Okay, for us, the fundamental outlook hasn't changed that much. Yes, trade is giving, if you like, sand in the cogs of world trade, but global growth remains firm, inflation remains controlled, interest rates are going up slowly, central banks haven't deviated from the path that they have said they were going to be. So most of that's priced into the market. What I would say today is that the market is pricing in something slightly worse than that. So they are predicting that tariffs are going to have effect on growth, going to have effect on inflation, and is also going to have an effect on what central banks' reaction functions are as well. So that's our core scenario. So we also think about what risks are out there, and I know that you're going to ask me that later, but let me get that out first. So what could slow global growth? Well, number one is a much higher oil price. So the oil price is up 50, 60% on a 12-month basis. If you look back through history, you have to see an oil price rising about 100% in order to be a precursor to a much slower growth environment. So from that perspective, it's not there yet, but the risk is rising, especially if you look at the tensions in the Middle East. And if there's a conflict in the Middle East and the oil price goes up, then that will cause a problem. The second issue we're also focusing on is the US dollar. And this is something that I've been talking about for some time, is that I couldn't understand why in the first quarter the US dollar was weak. Interest rate differentials, growth differentials, flow of funds were all pointing to a stronger dollar. And so from that perspective, you should have seen a stronger dollar in Q1. One of the factors that we've seen that's turned the dollar has been this repatriation. Now, $300 billion worth of US companies' earnings overseas has come back to the US in the first quarter alone. Now, estimates range between about 500 billion to about $1 trillion is going to come back in total. So we're quite a long way through that. But I think that's what really turned concerns about the weaker dollar into, well, perhaps it should be stronger from here.
Excellent, great. So that's the broad framework. So we need to worry about oil and we need to worry about the dollar and never mind the trade tweets. I'm wondering how this broader perspective feeds in from, to ASEAN countries, Vietnam and Thailand. And would you like to give us your perspective of these risks and the outlook from a Vietnamese perspective?
For Vietnam, we actually had one of the highest GDP growth in the first half of this year at 7.1%. And it's, the target is for 6.8%, and I think that we'll be able to achieve that. I think basically I agree with Colin in the sense that I don't think the fundamentals have changed much. despite a lot of noise around the trade war between the US and China. I think for Vietnam, the fundamentals are very strong because we are still recording very high growth in FDI inflows. The disbursed FDI is consistently at 8% of GDP, and that has been driving export. We are achieving very high export growth last year at 21%, and export last year stood at 97% of GDP. And on the other hand, we also have a young and large population that would fuel the growth of the domestic consumption boom. So we have both the export and the domestic consumption driving the GDP growth forward.
Right. And the risks that Colin mentions, oil price, dollar, how do you think that those will be kind of minimized or at least offset by these strong underlying factors?
For Vietnam, fortunately, we are similar to Malaysia. We are energy neutral. For Vietnam, at least, we do not have to import any oil.
Yeah.
And in terms of the dollar strengthening, it has impacted the stock market on the sentiment front. On the fundamental, we actually have a very stable currency year to date. The depreciation in Vietnam is only at about 1.5%, which is significantly better than Indonesia and Philippines, because we actually are running both a current account and a trade surplus. So that has been helping us. Of course, I mean, the risk remains to be seen where the trade war escalates to, but at least for the time being, I think that we're in a good position.
Similar story in Thailand, Konpapa, except that in Thailand has unfortunately seen its stock market really seen a lot of outflows in these past months, almost the most amongst all Southeast Asian countries. So how does that translate for you into your outlook?
Yeah. When you look at Thailand this year and last year, actually you can see that the fundamental of Thai country is actually stronger than last year. When you look at the growth of the economy, at the moment the latest number is that the Thai economy grow at 4.8%, and recently government come out and saying that it expected that the growth of the economy going to grow around 4.2 to 4.7%, come from the increasing in the export, in the tourist industry, on the investment in the infrastructure project by the government, and also we saw a pickup in the consumption and the private investment. And on the other side, when you look at the government side, the fiscal policy is very healthy. At the moment, the public debt to the GDP level is at around 42-43%. And when you look at the foreign international reserve, at the moment it's at the highest level in the last, I would say, 10 years, at 250 billion US dollars. So you can see that fundamentally the Thai country is very strong. However, when you look at the change and the change in the sentiment in the foreign investor, and it shows in the outflow of the money from the Thai market, it's actually the event that we see all over the world, not just emerging country, but also from the equity market in the developed country. And this is, in my opinion, is the time that the investors are actually adjusting the portfolio composition that they have. When you look at the investment in the emerging country during the past few years, for example, in Thailand, the foreign investor get at least the return from the Thai market almost 20% per year for the last 2 years. And at the moment, after they sold the proportion of their holding, at the moment, the most recent number of the foreign investor holding in Thailand is at still around 30%, which is our average long-term holding, which means that at the moment they are selling their profit during the past few years, and those are the number that we see. And when you look at the size of the outflow and you compare it with the depth and width of the market at the moment, it's actually, you can see that nowadays Thai market cap is around at 550 billion US dollars, coming up from 360 a few years ago. And also the liquidity, at the moment we are trading at 2.2 billion US dollar per day on average daily, compared to something like 1.5 billion US dollar 2 years ago. So this is comparatively, in my opinion, the reason why we see such a big number of outflow, but the market hasn't moved that much.
Right. So in that sense, again, the picture being one more of, the outflows are happening, but there's underlying support there that still happens. Do you share that view, Colin?
I do, and it's quite interesting at the moment because start to see opportunities arriving in Vietnam, Thailand, Indonesia, where the global flows have flown out, but they've sold indiscriminately. They've sold their equities, they've sold their bonds, so not based on any fundamentals of these companies within the countries. So that for active stock picking, active bond picking is an opportunity because these companies are now cheaper than they were, but the fundamentals of these companies haven't changed. And so that, to me, is an opportunity for the active managers in the region.
Right. And just a reminder to the audience, if you have any questions for our three panelists, please do send them in and we'll pose them to the panel. How do you feel, maybe a question for you too, and Kun Pahorn, how do you feel about ASEAN as an investment? You know, we heard about the fragmentation of ASEAN, we heard about how ASEAN countries were more domestic and inward looking. How do you feel, how does that mesh with what you're seeing your investors do?
In my opinion, it's quite on the contrary side, because when you look at the Thai company nowadays, when we look at where their revenue earnings come from, actually almost half of the revenue of the Thai company who report their source of earning, it actually comes from outside of the country. And the biggest destination of these companies who get the earnings are from ASEAN and CLMV. So in my opinion, I don't think that we are more like segregated, but we are more like the regionalized. And that's not just the reason why I think that Thai company only, it would be more for the investor also. When you look at investor nowadays, they have so much opportunity to invest, not just in the region, outside of the country, and also internationally. So I would disagree that our economy has been segregated, but I think we depend more on each other even more than it was before, especially after a few days that we heard Mr. Trump has been talking about.
From my experience being in Vietnam, I actually see that Southeast Asian investors are very important to us. Singapore consistently ranks as the third largest FDI investor in Vietnam, followed by Malaysia and Thailand. In terms of trade, ASEAN is actually our fourth largest export market and our third largest import market. And in terms of the capital markets investment, we are seeing increasing amount of investment from ASEAN investors, including Thai investors. The Thai corporates, conglomerates, including Central Group, have made heavy acquisitions in Vietnam in the past few years, totaling at least $10 billion, acquiring companies in consumer goods such as Vinamilk and Sabeco, the national champions in Vietnam for milk and beer respectively, as well as supermarkets. As we saw this morning, 15% of Central Group's revenue now comes from Vietnam. So that speaks for itself, I think.
Vote of confidence of ASEAN in ASEAN, right, in a way. Do you think that the capital market structures in, say, Thailand or in Vietnam, do they need further development? Are they developing along the lines as they should? Do you think there's a need for greater, faster development in order to keep attracting these funds and to provide the security that investors are looking for?
When you look at the need for the infrastructure investment in the region, you're going to see huge opportunity. For example, in Thailand, in Laos, and in the future in Cambodia and Myanmar, and especially in Vietnam also, in my opinion. Where would the money come from? At the moment, most of the funding actually come from the government borrowing. However, the government has a limit to borrow. In the future, if they want to expand the operation, if they want to expand into the new greenfield project, how would they come up with a solution? In my opinion, the funding from the capital market would be so important. The participation from the private side would be so important. How would the government weigh the balance between the ownership and the ability to grow? I would say that the use of the capital market, for example, like an infrastructure fund or infrastructure trust, or even the cross-listing of the equity in the regional market would be so important in the future.
Would you agree with that too?
For us, our experience has been that the capital markets have grown by leaps and bounds. In 2015, the size of the market was just about $51 billion. And today, the stock market size is $180 billion. The bond market in Vietnam is also at $40 billion. But the majority of that is still in government bonds. Yes, the liquidity of the stock market has improved vastly as well. And I think that a lot of that growth is attributable to the government's effort in enhancing transparency and foreign ownership, as well as speeding up the equitization or privatization, as it's more commonly known.
We talked just now before the panel a little bit about there needing to be a niche product, or something that appeals to investors to be able to invest in ASEAN. It was your idea in a way. Would you like to expand on that a little bit?
For example, at the moment, when Thai investor would like to invest in CLMV, Cambodia, Laos, Myanmar, Vietnam, it's quite difficult because the exchange in the market in Laos has, I think, 7 stocks at the moment. Cambodia have 4 or 5. In Myanmar, they have 3. And it's quite difficult for the foreign investor to go there and invest, exchange the currency into the local, and then going to the stock market, investing and put it in a custodian account. So the alternative that we are trying to provide is, for example, we have an index on the CLMV exposure, a Thai company who actually have a majority part or big part of their earnings come from this country. And we put it into the index and show it to the investor that this is the example of Thai company that has been doing a lot of business in those countries and has exposure, and Thai investor can actually start to invest in those countries now. In the future, we expect that what can we do next? How can we get the company in all those markets to be invested above in Thailand? If we took the company to do the listing here, it's going to be quite difficult because certainly it's going to cannibalize the growth of those markets. But supposedly that we have a DR program, depository receipt program, and put a depository program in here in Bangkok and get and buy, has an intermediary go offshore and buy those stock and put it in the custodian account and sell it as a DR product in Thailand. That would create both liquidity and the knowledge and the linkage between the 2 exchanges. In my opinion, at the moment, this is the way that the exchange would like to do. We have the DR program in Thailand already 2 years ago, and now we are trying to work with the other country exchanges to create this DR program.
Would that be something that you feel would be appealing to your investors? Or
I think so, and I have to admit that I'm a free trade advocate. So anything that deregulates and takes the sand out of the machine helps, and that makes it more attractive for investors, full stop, because they know that if you're going to invest, you know that at some point you can take your money out. For those people that are here, then obviously you're more susceptible to swings of what's happening in the global economy and out of your control. So I can understand why the balance needs to be there and why people take and you want to take small steps towards that. But I think deregulation is a big win if the countries are able to do that.
For me, maybe I just add, because I manage a UCITS compliant fund, and UCITS is basically a European standards for standardizing the requirements, the corporate governance requirements for funds. So maybe we can have a similar platform for ASEAN countries.
Oh, that would be great. I hope the regulators are listening.
When can we start?
You can start. We have a question from the audience, and they would like to know whether, though the economic numbers of Thailand look healthy, the question is, why are we still hearing, why is that? Why is the sort of the public sentiment of the economy in Thailand not as positive as the fundamentals would indicate? Would you care to comment on that?
I would say that sentiment is very volatile and very personalized, even though rationally the fundamental is very strong. But when you look at the global situation, certainly it creates uncertainty and uncomfortable situation for the investor. And also when you look at the growth or the pickup of the economy, it's not actually is a overall pickup, but it's a segment by segment pickup, and the speed of the recovery are quite different. That's why I would say that in some area or in some person view, they might think that it doesn't recover that much yet, but in some view, it say that, wow, we see a lot of growth, we see a lot of improvement. So in my opinion, I think we need to see how this recovery come back overall, not just in part of the economy.
More equal distribution,
right.
as the central bank
Right.
governor mentioned. Yeah. So one question, the other question from the audience, which goes also with a polling question that I had, which is basically, the question from the audience is, will we see a bear market in 2019 or 2020? My question for the polling was going to be, do you believe the EM sell-off has bottomed, or are we going to see further sell-off? So I would love if people could vote on that polling question, and meanwhile we can discuss the bear market question, which is a very loaded question. And who would like to take it first?
Well, I can start with the Vietnam example. At the peak of the market, which happened in early April, the stock market in Vietnam actually exceeded the previous all-time high and established a new all-time high, basically. But since then, the market has fallen about 25%. And at the moment, actually, a lot of stocks are now looking very interesting, very cheap even, because on a stock market level, the average PE is about 15 times for this year. But if you look at some of the mid and small cap companies, they're trading at 6 times to about 10 times PE, while earnings growth on some of these companies could be from between 30 to 60% for this year. And on a normalized basis, it could be easily 20 to 25% for the following years.
So that's definitely, there's some hidden gems there to be had. How about, what's your view on recession, bear market in 2019 or 2020?
So I think that the recession will start in the US. It always does, and always seems to start with US monetary policy being too tight. I would argue that with the flows going back to the US, actually US monetary policy's been fine. If you think of the amount of flows from just repatriation, that's been twice as much as the central bank has taken bonds off the market, and tightened quantitative easing program. So US liquidity is fine. We think that the US cycle's fine. It might be coming towards the later stages, but that's still a year to 18 months away before we see the recessionary pressures start to impact on the US. And once the US has problems, then that's where the rest of the world starts to have a problem. The other large economy that we should talk about is obviously China. And they're doing a very good job of managing this transition from an export-led industrial nation into a more domestic, consumer-led, and the central bank, PBOC, has done a very good job managing it so far. Now, we'll never know the sort of the nitty-gritty and what's going on underneath, but on the surface, they seem to have done a very good job of managing the situation. So I think we should continue to have the faith that they are doing the right things going forward. So we're pushing out our expectations of a global recession for 18 months.
18 months, okay, great. And
for the Thailand part, when you look at the market, it's actually peaked in January and has been going down recently. But when you look at this trend and you look at the company performance and the economic picture, you see quite a contrary picture. It actually should be picked up, but now it's going down. So our question is that, wow, if the external factor is that important, we need to look into what are they. The first thing is that, first, the US start to raise the interest rate a few times already. Secondly, the tapering start to come up, especially in European market. So you see a lot of fund flow outside on that. And lastly, the trade conflict. Certainly, it will affect our export, but how much we still don't know yet. So these are the three main uncertainty, in my opinion, that come from the outside the country. And certainly, the market would pick up quicker if we start to be clear on what the direction would be.
So apparently,
I think the clear transition mechanism is the dollar, because if you look at the US, it's going at 3.5% to 4% GDP growth, and they just had a massive $1 trillion stimulus over the next 3 years. So from that perspective, if the US is going on this growth trajectory, that will pull up the rest of the world. The key point and the key rebalancing will be the dollar.
Right. Okay, I'm afraid we're out of time. Thank you so much to my panel for participating in this and giving you some idea of what to think about for the year ahead. Thank you very much for the audience questions. And yes, we'll see how it all plays out. It's all about King Dollar. Thank you, everybody. Thank you.
Thank you.
Please welcome to the stage Shinta Wijaja Kamdani, CEO, Sintesa Group, in conversation with Bloomberg Television's Chief International Correspondent for Southeast Asia, Haslinda Amin.
Now, for this session, we'll be speaking about the largest economy in Southeast Asia, Indonesia, poised to be the fourth largest in the world by 2050, and to help it get there are the women. 20 to 30 million women entrepreneurs, 15% of whom are growth-oriented, poised to help their businesses grow. And Shinta is a leading entrepreneur in Indonesia. She heads Sintesa Group, which is a conglomerate with 17 very successful businesses. Shinta, good to have you with us. Now, first of all, let's talk about the Indonesian economy. It's almost to the day, 4 years since President Jokowi took over as president. Forget about the 7% growth. Maybe even forget about the 5.4% growth. You know, there are now questions about whether growth is sustainable going forward. Is Indonesia's growth story still intact?
I think to answer that, Hasinda, we also have to look what's happening globally, right? Because although it's very important what Indonesia is doing, and I can share with you later what some of the reform that has happened, it's also impacted by the global economy, what's happening globally. So I have to say, I think since the elected of the new government of President Jokowi 4 years ago, now it's not new anymore, we're going to have election next year, obviously there have been a very big effort in pushing these reforms. And till today, there are many things that has happened. And I think I can name a few that has been very much highlighted. First, the deregulation. I think for the first time, they are looking into cutting a lot of the regulations that were there. Not only regulation, but also ease of doing business. As you know, we have increased our position now to number 70 from 125. So it's quite a major leap. And we are cutting down and streamlining all our licenses. So this is not just in the central government, but also in the local government. They're trying to really harmonize more on the central to the regional and local government. And the second, when we talk about manpower, for example, you know, we have very big issue because of number of population. Indonesia is considered as we have a bonus demography with 260 million people. But if we are not careful, that bonus can be a liability. So what has the government done? Has it created enough jobs? And this is really the issues. You know, with what's happening at the moment, with the link and match, the government is trying to look at how whatever we produce outside from the education level, from the going into the productive age, are absorbed by the industry. So this is some of the, you know, they're moving into vocational training, you know, and then addressing also on the minimum wage, because there has been a lot of uncertainties until today, you know, even though with government regulation already having a formula of minimum wage, it still has a lot of this issue. The third is obviously fiscal policy, you know, and this is, I think, driven by taxation and so forth. But most important is infrastructure. For the first time, we have a government that's actually building a lot of the infrastructure that was not there yet. But because we have been lagging behind, even if they build, the pace will never be fast enough, right? So we continue building both fiscal and soft infrastructure, but it's just not having the pace that we wanted. So this is, I think, some of the reform policy. With the, we have a package, economic package the government is doing. People are questioning about implementation. We do have inputs on that. But there was really a big drive from the government to want to make it happen.
Okay, some of the reforms are in place, but investors are not really buying into it simply because of some of the nationalist policies. If you take a look at the Freeport issue, investors are being sidelined because they're not sure what message exactly is Jokowi sending, despite the fact he's saying Indonesia is open for business.
Right. So the question remains, is between Indonesia want to liberalize. Liberalization versus protectionism. That's really are the key words. But where are we? Right? We are promoting, we are open, but yet we are protecting, obviously, a lot of our industries as well. So I think what is important to look at is what do they actually do, right? For example, we haven't really had trade agreements. You know, for the longest time, we have no bilateral trade agreements with many countries. Maybe now we have like one or two. So we needed to start now developing a lot of these bilateral agreements. We are now going with Australia, with the EU, you know, even RCEP we're trying to complete also this year. So all the bilateral, regional, and multilateral now Indonesia is focusing. But all of this will also not matter if we are not developing our industry. Because at the end of the day, industrialization is key. We are wanting to promote more export. But what are we exporting, right? A lot of our exported products, all raw materials are basically, you know, coming from other countries. So we have to import raw materials. We are now exporting basically our, you know, our own natural resources. So we are not having any added value commodities. And this is very, very important that we look at. We have to map our industry and see how we can really develop that. That is, I think, a big homework that Indonesia has to do. So we know that we want to be open, but we have to be very cautious that if we open, we have to also be ready. I think that's the key.
I think what's important for investors is continuity. So question number one is President Jokowi distracted by the upcoming election that his reforms may be delayed? And two, is he likely to win the next election?
Well, I'm not I don't want to give any political comment, but all I can say is like this. I think in many countries we face similar. Obviously, when there is election ahead, it will bound to impact the existing government. I can't say, I would be lying to say, oh, it's not distracted at all. But I think he's not working alone, right? He has a lot of people in the government. So what we need to ensure that the business has to continue, right? Economy has to grow. We cannot, because of elections coming up and everybody's busy campaigning, you know, the country cannot be on hold, right? So,
but he is distracted.
Obviously, in any countries will be similar. We cannot say there is no business as usual. Of course not.
Is he poised to win the next election?
We are very optimistic, I think. I mean, I'm not going to answer who's going to win, but I think he does have a very strong chance of winning again, yes.
Where are the opportunities in Indonesia? Because even for Syntesa Group, it's looking at a new area, which is renewable energy. So if our investors are interested in the Indonesian market in the next 12, 24 months, which industries are looking attractive?
Well, first, I have to say infrastructure is definitely a key area. When we talk about infrastructure because of connectivity, you know, we have such a vast archipelago we needed to build, whether that's airports, whether that's seaports, you know, toll roads, you know, we're building tremendously. And also
But bankable projects? Are these bankable projects?
Yes, of course, bankable projects. We have now priorities project that we are ready to sell to foreign investors as well. But government definitely doesn't have enough budget, so we have to drive investors. We have to get investors. Now, for us, Syntesa are looking, because we have our vision of being a sustainable, excellent companies. We need to look at what are actual area of business that we can contribute, but also is in line with what we believe in. And we thought something that Indonesia has very big potentials is renewable energy, and that has not been exploited enough. Why? We have the largest geothermal, for example. You know, how many has it been developed? So there are many opportunities in the renewable that at the moment are needed. We cannot be relying only on fossil fuel. And I think the government realized that. They are already changing now the mixed use. It will be 50% still on coal, but we have also 25% on gas and 25% on renewable. Although the target right now is in 2023, we want to have 25%, it's still very far, but at least we are moving there. I'm not going to talk about many challenges. We're talking about the feed-in tariff still issues. We have a lot of land acquisition. And we have many issues. But we need to believe that we can carry that through. Because there are many projects, We have talking about solar, we have wind, geothermal, we have many, hydropower, there's so many now that's happening.
You talk about how you don't really want to look into the challenges, but for a foreign investor, I mean, you've been the advisor to the vice president before. For a foreign investor, what's the biggest challenge he or she may have to navigate?
Yes. I think first on the legal certainty, right? No investor want to come in unless they're clear on the legal certainty. And I mean, everybody's have been talking about that. How can Indonesia give us an assurance that we are protected legally? And I think this is a continued effort that the government will have to do. But to me, I always say when because part of my job as in the Indonesian Chamber of Commerce is driving more foreign investors as well. And I said, find a local partner. Find the right local partner. Because the local partner can help you navigate a lot of these issues. The government relations issue on the licensing, understanding the regulation, and understanding how can we move in Indonesia, how to do business in Indonesia. Find a local partner. I think that's really the key.
How about what is deemed as the resurgence of Islam? We saw what happened in Jakarta with a change in governor. Is there cause for concern that religion could be an issue in the country?
First of all, we have to see that actually Indonesian issue is not just religion. It's the gap between the rich and the poor. Because our Gini ratio is still quite high, 0.39. So the government is now pushing what we call the economy equality programs. Working big businesses with small businesses, developing more of our SMEs, working also when we talk about religion now, we are also working with many of the pesantren. So big businesses now are working with pesantren. I have what we call...
Pesantren are religious schools.
Yeah, religious group. And they are also developing business. Like, for example, I have big retailers in different sectors. Retailers work with developing with, pesantren on small retailers, trying to go and develop the wagung-wagung, we call it the stalls, And a lot of these, we set up what we call the partnership program. So what we want to show is religion is an issue. But what is important is if we can narrow that gap, right? How can we really build the people, the grassroots people, to really get more economy driven. So basically, we are trying to develop more partnership in terms of developing more entrepreneurs as well. And this is really a key of how we can't be relying on just creating regular jobs. We have to really build more, rely more on developing entrepreneurs.
Indonesia, of course, the largest economy in Southeast Asia, but some say it can do more to play a leadership role within ASEAN. In my conversation with President Jokowi, he was kind of reluctant to address the role that Indonesia could play. Do you foresee Indonesia taking up that leadership role at some point in time?
We are the largest economy in ASEAN, right? I mean, obviously, look at Indonesia, we have to stand with some sort of leadership there. And I think ASEAN has been an important integral part of us. ASEAN, the integration of ASEAN is key. So I have to say we've always been supportive towards how can Indonesia also take the leadership and how Indonesia can put not just Indonesia as a market, but ASEAN as a market. And we have to really work together on that. And I think the collaborate of one ASEAN is very, very important. Indonesia, I think, has his mark with all the political conditions, and many ASEAN countries as well. There have been changes. But one thing for sure, I think ASEAN remains stronger. We are moving. Everybody have a common goal. We want to reach that level of common goal, and we want to continue working. And all that, not just the government, but also the businesses like us, the private sectors, and also the civil society. So this needs to have all, collaborative effort, because it cannot come just from the government. So when we talk about leadership, leadership cannot just come from one government, right? We need to also be participative. We are looking into more collaboration between even ASEAN businesses, between countries in ASEAN, how we can develop businesses together.
Shinta, we have 8 seconds, but I'm going to ask you this final question. When do you see Indonesia realizing all its potential? Initially, President Jokowi was looking at 7% growth. Some say it actually has the potential to grow even faster. But realistically, when will Indonesia get there?
I think the word that I'm always using is we are very optimistic, but we are cautious, right? Because like I said in the beginning, what's happening to Indonesia also impacted by what's happening globally. But
when do you see 7% growth? When do you see 9% growth?
The 7% growth will get there, but it will not happen in this year, next year, or even the next 2 years. I have to say, we have to work gradually to reach that 7%. It's no longer next year will be 7%. It will not be like that. So we need to remain optimistic, but we need to also be patient. We are cautious, we are patient. So we have to go slowly, but we will get there. We will get the 7%, for sure.
Shinta, thank you so much for your insights today. Ladies and gentlemen, please, a warm applause for Shinta.
Please welcome John Brown, CEO, Agoda, Marcia Yu, Senior Investment Officer, International Finance Corporation, and Bloomberg Southeast Asia Managing Director, Linus Chua.
Hi everyone. That was a very energetic discussion between Shinta and Haslinda, so we hope to follow up with that. Let me just briefly introduce our panel today. I have Marcia Yu, who is from the IFC. She's the Senior Investment Officer there. We're in the global lead for housing, but she's also a member of the global team that looks at tourism, real estate, and retail. And of course, I have John Brown, who is the CEO of Agoda, one of your favorite booking platforms, I'm sure, for all your travel needs. So let's kick off with the discussion. I just want to throw out some things out there really quickly. First of all, I'm really excited to have this discussion right here in Thailand. I mean, this is the biggest market for tourism receipts in all of Asia. Tourists spend more here than anywhere else in the region. And also some of the data that we're seeing across the region. We're looking at China potentially becoming the biggest aviation market in the world in 4 years. Asia Pacific's share of the tourism market in the world has doubled over the last 2 decades to about 30% now, a pace that could continue on if the trend continues. So let's start with you, John. Do you see this trend continuing? And also, is the infrastructure ready for that?
So, yeah, I mean, a couple things on that. First of all, from our point of view of Agoda, we were founded here in Asia, so we're used to seeing this. And for sure, the level of tourism that we see coming into ASEAN overall, even Thailand in particular, it's been an amazing growth story. And it does not look like it's slowing down. You look at a place like China, which is such a gigantic market to bring tourists inbound to this part of the world. And we were talking this morning that, in China, only 8% of the people have a passport. So literally 92% of the country, of over 1 billion people, as everybody knows, they're still there and they're waiting to come. So I feel like this trend that we see here is one that will definitely continue for many years to come.
Marcia, how about you? You assess a lot of investments that come your way for hotels. What is your view of the trend going forward?
I think
the pace of growth.
I think there's definitely tourism is a real engine for growth for a lot of developing economies. I mean, as we know, the sector itself is about 10% of global GDP. In terms of number of people employed, 1 out of 10 people are involved somehow within the tourism, in hotels or in the supply chain and so forth. And a lot of jobs that are created out of this industry are very inclusive to the fact that a lot of youth under 24 are employed in this industry, and a lot of women are actually employed in this industry. We find that in terms of us assessing, sort of the growth in the region and around the world, we are in the business of really diversifying this growth into more rural, more into regions that have not benefited from this growth. So in this region, we just completed a transaction in the Philippines where we supported a developer that are looking at new destinations in Palawan and in sort of more underdeveloped regions. So tremendous opportunities.
Everywhere you go, you see new hotels being built. You look at airlines, ordering planes by the billions of dollars. We're seeing more and more orders coming in anticipation of this trend. Is there a risk of overbuilding at this point as you look into these investments?
Not specifically, but one thing that we always tell clients is to be very careful about the supply and demand, of the unique, markets. At one point in time, for example, Yangon, there's no hotel sort of rooms there. But for a while also that, everybody is going in and cause a little bit of oversupply there. So this assessment of the market supply and demand is very important, especially for developers whose projects, depending on the format of the hotel, could take 1, 2, or 3 years to complete. And by that time, when the rooms come on stream, the market could be completely different.
How about you, John? You have a bird's eye view of the inventory out there. How does it look at this point? Are we matching the right demand and supply balance?
Yeah, I mean, I would say, in short, I feel like the balance is pretty good. I know a lot of people tell me when they walk around Bangkok or they take a look at the level of occupancy in a bunch of the hotels here that there's a fair amount of spare occupancy, but I feel like people are building ahead of the continued demand. And that's one thing, like I said before, we do see just continued rises in demand to this part of the world. We're lucky to be living and working in a place like Thailand or ASEAN in general, because really so much of the world wants to come here to visit. So being in tourism in this part of the world is great. And I think people are just building ahead of the demand that seems to come year after year.
Okay. What's the competition landscape like right now? I know that for your booking site, for example, you now not only just include hotels, you have apartments as well. How has the competitive landscape changed?
Yeah, competition, I would say on that one, Thailand is one of the best places in the world to visit. That's the good news. And the bad news is also that Thailand is one of the best places in the world to visit, because when Agoda was set up here, I mean, literally in the early 2000s, it was a great place to choose to open up this kind of business, because you had so many people wanting to come to this part of the world, and we were experts at that, and so we were at a very good place at a very good time. But the downside of that is that literally every company in the world wants to be in Asia. Everybody realizes what a good market this is. So you could argue, for example, that in the US, some travel companies are very strong there, and other companies haven't really gone there to compete just yet. And you could say the same thing about Europe. But when you look at Asia, you can think of any big global brand having to do with tourism, certainly in our space, in the OTA space. And I won't name the big list of competitors, but it's a big list, and it even includes big companies like Google now and others like that. Every last one of them wants to be in this part of the world. So competition, I feel like, is definitely intensifying, but it's good for the market.
How about you, Marsha? Have the likes of Airbnb and even Agoda changed the way you assess investments, the way you think about potential investments, say, in a new hotel, for example?
Yes, definitely. Yeah, I mean, as we assess the market demand, we have to take into account, whether it's business or the tourism, or the people with the ability to pay, which grade they are in. So yes, definitely, we assess that as well.
Okay, at this point, I'd also like to invite all of you to send in your questions through the mobile app. You'll see the instructions on your table. I also wanted to talk a little bit about the changing profile of travelers. Maybe John, let's start with you in terms of, you see the way people are booking hotels and their travel plans. Has the mix between business and leisure travelers changed? And also convention delegates. I know a lot of governments have spent a lot of money in convention centers, and a conference like today, do we need to do it physically, or are we seeing technology changing that as well going ahead?
I think in terms of technology, the first thing I would say, and it's old news now. Everybody's booking on one of these. Everybody has one, and all the competitors that we have, including our company, have not necessarily the majority, but a gigantic portion of people are booking on a mobile device, and that's sort of old news. But I think what you see happening though is what else that means, and that means, for example, it used to be that people booked vacations with 60 or 90 or even 120 days of advance lead time. And now we see more and more people who are booking on a mobile phone on literally Thursday night to check in that next morning. Maybe they're booking on Friday night to check in that very night. So you see a much shorter lead time for sure, which means people are traveling much more spontaneously than they would have in the past. And then that in turn means something else. That means that people who are traveling this way, they feel that they need some level of flexibility. So, for example, we see many more customers now say, I want a much more flexible cancellation policy. Like, hey, it's Wednesday night, I'm booking on my mobile phone, but by tomorrow I may change my mind and I want to cancel. So typically when customers want to do something like that, we try to follow what they want and give them more flexibility around, different price types, non-refundable versus refundable. We work with hotels to make sure that people can do same-day check-in. So I feel like the big thing that I see, and certainly among young people in particular, is mobile, but then all the other things that entails. Again, flexibility, short-term bookings, people planning things on the fly, and everything else that goes along with that.
Marsha, how about you? In terms of planning ahead, looking at the mix between business and leisure travelers, have you noticed that trend? Are you adapting to that trend?
Yes, and we obviously different destinations or different projects will have different target segment. In terms of your question, Linus, on the new millennials, right, coming in, we also see that a lot of sponsors, what they're doing is increasing the offering, the tourism offering in that country. This project that I mentioned in the Philippines, for example, the sponsor is now looking at a beach club, something that is, a new concept, really targeting to millennials who are, into spending time, different concept to what we've seen before.
Okay,
yeah,
one of the first
sorry,
questions.
I would add
Go
one
ahead.
thing, just to, I realized that the other key trend I didn't mention is that when it comes to flexibility and convenience as well, people increasingly seem to want everything available in one spot. So it used to be, okay, well, I can book my flight over here, I can book my hotel over here, I'll figure out dinner reservations when I get into my destination. But increasingly now people say, hey, I want to go to Agoda, for example, I want flights, I want experiences, I want ground transportation. So it's another example of where we've had to retool our site and our mobile app to put all this in one place because people are demanding this ease because, again, it's much more last minute than it used to be.
Okay, one of the questions here that's kind of interesting and in line with what we're talking about in technology. What is the most challenging issue facing your company operating in this region using digital platform? Maybe John, since you run entirely on the digital space?
Yeah, for sure. Well, one of them, I guess, is old. One is that it used to be enough to have a website. Now you have to have a website and a mobile website and an Android app and an Apple iPhone app, a tablet app. So, it used to be that you had one platform that you had to maintain. Now you've got 5 or even more than that. The other thing I would talk about is payments. I heard a couple of the people today discuss payments. And to be a very, very good e-commerce site, you have to have really frictionless payments. And because payments are kind of the hard part of e-commerce. You spend a half an hour on a site, you want to make the booking, and on the very last page, for some reason, your credit card isn't accepted. Or maybe even more often, hey, you know what, I'm a Chinese customer and I book with WeChat Pay, I book with Alipay. I don't want to use a credit card. As a matter of fact, very often the answer is I don't even have a credit card. So making your website accommodating, making it able to accommodate literally every payment type that is out there is important. And you know, obviously in this part of the world, let alone globally, but even in this part of the world, the payment options are really quite different from one country to another. And if you're going to be upon a pan-Asia site like Agoda is, you have to be really darn good at accepting all of those. So I feel like from a tech point of view, it looks easy, but it's actually hard, and it's something you can't afford to get wrong.
How about you, Masha? Has going digital increased or decreased the costs in terms of operating a hotel or the investments in a hotel for you?
Definitely, we have to assess that. But the biggest part, I guess, for a hotel operator would be on the services, right, on the labor and so forth. And this is something that the World Bank cares deeply about. And oftentimes we really work with a hotel developer to train the workforce. For example, in one project that we did in Mali, we actually helped the client in setting up a hotel training school where it's now feeding into the group's 7 hotels in the region. So that's an important part of the business.
Okay, there's an interesting question that came in. Actually, it's the first question that came in from the audience, which is, should the Tourism Authority close Phuket? But I'd also like us to think a little bit more in terms of sustainability as well. I know you mentioned about beach hotels in the Philippines that you're building. Yeah. The government has, of course, shut down Boracay Island. We saw the same for PP Island, where they've shut down certain parts of it. Obviously, that's been made famous as a result of the movie The Beach. How does this clean up, and is there a need to do more of these cleanups? Is there a need to shut down destinations because of environmental reasons? Any thoughts on that?
Maybe I could take that first. So whenever we look at an investment, this is a very important point, right? The sustainability. In terms of performance standards, we look at cultural heritage, we look at biodiversity, we look at energy efficiency in the project, and without regard to all of this, a project will not be sustainable over the long term. And it's an effort, but both, with the private sector and the public sector. And, Boracay is a prime example. Closing down, but, hopefully they have a long-term view on, how to reassess things. Yeah.
But doesn't that create uncertainty as well for the hotel operator or an investor?
Yeah, and that's why we as a World Bank Group also work very closely, with the government authorities. When we assess a project, we have to make sure that the operating, the environment actually is conducive to operators, conducive to having a certain number of tourists, coming and enjoying the area. So it's all part of this holistic offering that both the company as well as the government should really think about.
Okay, John, how about you? Has that posed a big headache for you in terms of like cancellations and refunds?
Yeah, certainly the situation in Boracay, it creates some headaches for sure. Thankfully, we've got a big and good customer service department, but certainly it is a headache. And I guess it's too early for me to comment whether or not when Boracay reopens, I think it's October, they said, whether that has made a big difference or not. Hard to say. I just don't know.
Okay. One of the trends that we're seeing is, of course, the emergence of the Chinese traveler. There are more and more Chinese traveling abroad. I remember when I first started covering this market, the tourism market, more than a decade ago, it was the Japanese, the Americans, the Australians. And now, in every market in Asia, it's the Chinese travelers have dominated that space. Will the tourism offerings change as a result of that? Marsha, as you build the next hotel, as you look at the next hotel investment?
Yes, I think a hotel really needs, if it is a tourist destination, it really needs to think about this strategy. What kind of clientele is it going to be a mass market product, or is it going to be sort of like a high-end luxury product? Because obviously the footprint is very different, and the impact on the environment is also quite different.
John, how about you? Have you seen any changes as a result of the emergence of the Chinese traveler?
I think from our point of view, certainly on the website itself or on the mobile app, you have to make many changes. Like I mentioned, payment options, specific Chinese content, for example, Chinese meal options, tea service in the room, etc. Marcia would know more than I about whether you have to totally reconfigure your hotel for the Chinese tourists, but you certainly have to spend a lot of time configuring your website for one.
Now, both of you have made references to the younger travelers. Millennials will make up the most active group of travelers for the travel industry in the next decade. They're going to be different. They're going to be independent politically and having independent political and religious views, better educated, willing to take more risks, care about the environment. How do you cater to that group of tourists? John?
I would say one thing. I forget what movie it is. There's a funny old movie where they ask a question and they say, "What's the answer?" And they say the answer is plastics. And I say that facetiously, but it's true that the one thing we see from millennial travelers a lot around the world is people have a real desire to go to a hotel where it really feels like a green hotel. And one issue we hear about again and again, and everybody who lives in this part of the world has heard of it, that there's a massive problem with plastics. These bottles, which I try not to drink from, or straws. And you'd be surprised how many people we have now on site. It's small, but just beginning to grow, where people say, is this an environmentally friendly hotel? Have they eliminated single-use plastics or not? And the answer in this part of the world is, or frankly all over the world, is probably generally, well, no, they have not. But I do know that more and more hotels are working on that issue as well. It's one of those things that we, from our younger travelers in particular, hear a lot about.
How about you, Masha? Has any advice in catering to that group of travelers?
No, I mean, I don't have a millennial, but I have a 12-year-old. And when we go on holiday, he would ask, he'd take away my straw, he would take away the bottle of water. So, it is this generation, right? They do care.
Okay, it looks like we have less than a minute left. Very quickly, if there is one investment you would make, an off-the-beaten-path investment in Asia, in the travel industry, what would it be for you?
Oh, that's for me.
Either of you, both of you, okay. Actually. Let's conclude with that question.
I got the question this morning. My answer this morning, it still stands, is, I think Myanmar, now that it's open, it's incredibly big and beautiful and has so much potential. If I could make an investment, and Marcia probably has, I would say I would love to put an investment into Myanmar. Agoda has an office there already, but I would just love to go there and build something big. I think it's a place with a lot of potential.
I think I would agree with you, John. I mean, we do have investments in Myanmar, and also Sri Lanka, really has a lot of, you mentioned about this thing where people want to go to one place and they want to do everything. So, I mean, the more offerings, the more you can create a circuit, you attract more tourists and they spend longer, put more money in the economy.
All right, I guess that's all the time we have. Thank you so much for sharing your thoughts with us. Please help me thank my panel for this fantastic discussion. Thank you very much.
Please welcome to the stage Sutapa Amonwitwat, CEO, SCB Abacus, Klaus Anderson, President, Southeast Asia SAP, Sharon and Bloomberg Intelligence Senior Analyst, Asia Financials, Diksha Gera.
Welcome, everyone. A very good afternoon to everyone here. As they say, we've left the best for the last. The fourth industrial revolution, technology transformation, hasn't technology actually been influencing industries, including the financials industry, for the past few decades already? So 1950s, we had the credit cards. The 60s, we had the ATMs. 70s was electronic stock trading. 80s was e-commerce companies coming in and disrupting everything, having online stock brokerage. So basically, is this tech disruption really a new development? No, right? Then why is it that everyone is so fussed up about it? Why is everyone talking about it now? I think the reason is that from here on, every next step we take, the impact is exponentially huge and it's exponentially faster. So that is the key reason why we have the entire audience still hanging around here till this late to hear your thoughts. And actually, without taking more time, let's get on and hear our panelists' views on what is the next big development, what is the next technology development that you guys are most excited about and that will change, completely revolutionize the way businesses are operating right now. Why don't we start with Dr. Sutapa?
Well, thank you, Bloomberg, for inviting me to share the view with such illuminaries. I think the next step would definitely, and it actually has been in the last 5 to 10 years, is AI. I think artificial intelligence will be part of everyday life. Imagine what happened about more than 100 years ago when first electricity has become available. You just plug in the common device, put it in the electricity, and voila, it has become much more efficient, much faster. Now the field of AI has been in development for the last 80 years, actually. But in the last 10 years or so, it has become commercializable. And that is the next phase of AI. When I talk about AI is like electricity. It will be part of life where today you can't imagine living without electricity. That will be part of it in the next year. But the area that I would like to emphasize is right now we see a lot of shortages in the data scientists, data engineering, depth development, and a lot of the people are trying to re-educate or retool themselves. So I would imagine that in the next decade or so, a lot of the AI program can help educating the new crops of talents. The next one would be the shared infrastructure, the shared data infrastructure that the government provide to a lot of the big corporates and small corporates, small SME in the market.
I see. So AI is the new electricity, guys. Sharon, moving on to you. I mean, given the strong foothold of SWIFT and payments, I mean, what is the next development that you're most excited about?
Well, I guess in the space of payments, and that's where we probably see a lot of the disruptions in this space as well. What we're seeing right now, the biggest trend is really on real time. We're seeing a lot of, in the domestic front, you see a lot of the domestic real-time payment systems. In a lot of countries, they are actually embarking in implementing real-time payment systems. So you have Thailand, you have PromptPay here. Singapore, we have Fast or Pay Now. Hong Kong, you have the Hong Kong FPS. And Malaysia is also embarking on their real-time payment systems. But
actually, let me put you on the spot there. Like, among these 4 markets, which one do you think is the most developed in terms of the infrastructure for real-time payments?
Well, they are all there right now. So Malaysia Malaysia and Hong Kong is in a process of setting up their real-time payment systems, right? So we're supporting them in some way or another. But real-time is definitely one area that we see that is really going to make payments faster, obviously in the domestic front, but also the countries are also looking at how we can make cross-border real-time as well. How can we speed up real-time retail payments cross-border in a real-time basis? So this is more, I guess, on the cross-border side, this is really close to our heart from a SWIFT perspective, right? Because we do a lot of cross-border payments, and that's why in January 2017 we came up with a new initiative called GPI, which is the SWIFT Global Payment Innovation. This really helps to, there's really 3 key things in SWIFT GPI is to make payment faster, providing transparency, and also importantly to provide traceability. So allowing the banks, their customers to be able to track where the payment is. So this is really exciting and all using new technology like cloud and APIs as well.
It's pretty much like a DHL for your payments,
Yes.
essentially. Okay, Klaus, so you have actually been helping a lot of industries disrupt themselves. So what are you most excited about?
A lot of things, but amongst others, augmented humanity is a big thing for us right now. So what we try to work at SAP is basically take all the great technologies we have available and bring it together. So basically the convergence, the integration of technology that we have, or for that matter, some of the many great partners we have, and bring that into one intelligent enterprise platform. What that gives you ultimately is an opportunity where we today can provide systems, ERP solutions, where you can talk to your ERP solutions, your financial systems. It can give you a real-time response. It can give you insights on things that you may not have asked for, but based on your questions, it will give you an indication of things that others would have liked to have known that where they've asked the same question. So basically moving into the space, robotics, artificial intelligence go under the same umbrella, but it all comes down to bringing all the technology we have available today into one integrated intelligent enterprise platform.
Awesome. That's the Leonardo platform as well, right?
Amongst others.
Yeah. Okay, I think from my viewpoint, mobile phones will become redundant sooner than any of us expect. Yeah, look at me with a little bit of surprise, because given the pace at which voice recognition, facial recognition is developing, and wearable devices, human microchip implants, UOB is actually doing work around this, and actually the very mobile phones that you guys are so glued into, you might find them redundant very soon. So I think just kind of focusing a little bit more on the AI aspect, especially Klaus, Dr. Sutapa, since you guys have been working on that front. I mean, how do you perceive some of the ethical concerns that kind of accompany the AI bandwagon, right? Especially like around job losses. So what are your thoughts around it? Maybe Dr. Sutapa, if you could share.
I would like to sort of take that in perspective a little bit. In 1400, I'm sorry, we talk about 4.1, 4.0, but let's go back to 1400. 60% of population in the UK were needed to feed the entire country, right? And today it's 1%. So if we actually come up and put a lot of resource in the protectionism regulation, that would not have happened. The technology innovation would not have happened. And I would like to point out that a lot of these regulations, such as minimum wage, can actually be a short-term solution and accelerate the adoption of automation. So in some way, I would hope that the energy, the investment going into subsidized educational retooling of the displaced worker, better social safety net, and using technologies actually increasing job opportunity for the people who got displaced by the development for automation, because you can't really slow that down.
That's a very fair economic theory, right? Like those investments go into other areas. What are your thoughts, Klaus?
I think AI offers a fantastic opportunity to all nations, all companies, all government institutions around the world. The reason being, it gives an opportunity to automate processes. Irrespective of what kind of field you're in, there's a lot of manual work done, and with what technology do today provides a platform where you can automate that. Yes, you can take the more negative perspective that will provide job loss. I tend to take the more optimistic view of it. It offers an opportunity to give the workforce the chance to work on more value-added work. Instead of sitting crunching in your financial spreadsheets number, why wouldn't that be more automated? You spend your time analyzing the numbers that is provided to you and take the right action to guide your business in the right direction, or make the right decision if you're sitting in a government agency or institution.
Yep, absolutely. So guys, here is the opportunity. If you think you've got like a relatively dull job, crunching numbers on Excel, and I hope you attended the session with Gagan today, AI is our opportunity to follow our dreams, follow the dream job. So that's a very interesting viewpoint, actually. Let's move on to the next session, which pertains to the relationship between the financials industry, as we have known it so far, and the big tech. I'd like to poll the audience on that front. Basically, the banks are trying to enter into the space of e-commerce, provide marketplaces, whereas the big tech or the e-commerce companies are trying to provide financial services, wealth products. So they're all entering into each other's arena, which was actually dominated by the other. So the question is, who will win? Will it be the Wall Street or will it be the Silicon Valley? Please take out your phones. This is a tech session, so that's what we got to use. And tell me, what do you think? Who will win? Will it be the tech giants like Amazon, Alibaba, Tencent, or will it be the core financials industry that we've kind of seen in its shape and form so far? And while the audience polls on it, I want to pose the same question to my panelists. And not just who will win, but also what is the key advantage that one has versus the others which will help them fight and defend themselves in this war? So I'm going to start with Dr. Sutapa again.
Wow. Well, I definitely have a vested interest in answering one question or the other. But let me put this way. We don't just see, we will see, and we have been seeing lots of partnership, between not just tech company, but also very different industry that actually technology has helped enable that partnership. We can see fashion industry and technology. We can see, remember Pokemon Go as retailer and gaming industry. We can see, we just launched, the online lending platform with Lazada, so it's e-commerce and SCB, which is a bank. And we will see many, many other, because not so much about technology, but because of the data that's become much more available. So the technology in which we can draw information and the regulations, the surrounding, that ability to connect the data is very important. And when, now that I talked about regulation, I just want to add one sentence, is privacy and the privacy and the abuse issue have to be discussed very closely along with the technology. So I just want to put that in perspective.
Sure. I mean, obviously there is no lone battle, like your partners or your allies kind of decides who wins the war. But if I were to put you in a spot and ask you, like, what is the core advantage that, say, a bank like Siam Commercial brings to the table that the big tech may not have just as yet? Like, what helps them fight that war?
I think the most important word is just yet, right? So right now we certainly have a much more localized knowledge of the customers. But that's the word, just yet. So this is, we see more and more partnership between tech company and traditional industry players, but the time will go on when the traditional business would have to look into what would be the real knowledge beyond just, being, understanding the customers. They have to have the real technology development within themselves. So you see a lot of technology, we see a lot of traditional players investing more and more into their own technology.
I see. And Klaus, like, what do you think the big tech has an edge on?
I'm a little bit torn here. I actually started my career in the financial sector in the Copenhagen Stock Exchange. I turned to the tech sector, so I guess I have to vote for the tech sector to win this battle. I guess the more important part of your question is obviously who has an advantage. I think what we are observing across the nearly 400,000 customers we have across the world is that the one who really wins the battle in the battlefield are the one who knows most about their customers. The one who have the ability to predict what their customer wants. The one who have the ability to predict it in real time. The one who have the ability to create product, solutions, services, and provide them to their customers when they need them, where they need them, at the right price point. So there are many great tech players out there who's doing this already today, but I think the fantastic part is there's a lot of bank, a lot of financial institution who's moving rapidly in that direction. Example being, three of the largest banks we have in Indonesia is embarking on a journey or already on a journey where they're on a mobile platform provided by SAP, basically giving their customer the experience that they can do all their banking service online, as well as for the bank to get more insights what their customer wants. So I guess end of the day, future will tell who will win, but I think whoever has listened most to their customer and act upon is probably the one who will stand on stage last.
That makes complete sense, right? So basically banks are becoming big techs now in that way. Sharon, what is your thoughts around it? I mean, I'm sure all the tech companies are kind of vying for that cream business that you have on the payment side. So what does SWIFT have to defend turf and to kind of go in and protect its own territory?
Well, as you know, like SWIFT is a member-owned cooperative, right? So we're pretty much owned by the bank, so I think I have my shareholders here today. But what we see is like, the banks, our shareholders are really stepping up the game right now. And there's a lot of very innovative collaboration that's going on as well. So SWIFT obviously play a very key role when it comes to around innovations, right? So earlier on I talked about the SWIFT GPI. It is a collaboration between SWIFT and the banks, helping the banks to facilitate that. That's one. Now the other thing is I think I was asking a client today, I said, when was the first time you heard about fintech startup? And he says, well, 2-3 years ago. I said, yeah, that's what I've heard as well. The reason being, the reason why I ask is because SWIFT actually has an arm called SWIFT InnoTribe. We set up InnoTribe since 2009. So it's been for almost 10 years right now. So InnoTribe was actually set up with the objective to facilitate innovation, collaboration between fintechs and the banks. So we did it through a global industry challenge. So every year there is a global industry challenge that is held by SWIFT, facilitated by InnoTribe, bring banks and fintech together really to solve the problems that the banks are experiencing. So it has been ongoing. So last year we did that in Singapore. And we brought 5 global fintechs into Singapore with 30 banks participating in this session, 2 days of workshop, and we got 2 winners. And these 2 winners right now is a fintech company from UK and one from Australia. And right now we are actually working with them, creating overlay services on top the SWIFT rails, collaborating with the banks. So we've been doing that.
So you just go disrupt yourself. I mean, this is not a lone battle to fight. I would very much like to see what the audience has polled for, like who is going to win the battle. Can we please see the poll results? Ooh, that's amazing, Klaus. I think you were bang on.
At least I still have a career.
I think it'll be very interesting to see how ASEAN shows this kind of a battle win over. I mean, if you were to look at China's example, the winner is very clear, but regulatory aspects and those developments kind of play a huge role in terms of how much disruption big tech can do. And the other thing is the banks pretty much are becoming tech companies. If you follow what DBS says, he is literally a tech company. That's what he claims. I think we'll quickly move on to the next final session of areas that we want to kind of address. And I would really like the audience to poll on this again. The question is, in this new world order, what is the issue that actually keeps you awake at night? What is your key concern for you or for your clients or for your company? Could you please, we'll take the results in about next 1 or 2 minutes. And while the audience polls, I'd very much like to kind of get a quick answer from you guys, like what is your key concern in this new world order? Dr. Sutapa.
When I first glanced through all the 3 choices, I would jump immediately to the third one, which is the shortage of HR, how to recruit good talent, particularly in data scientists. But this is how fleeting this calamity will be for the company. At the end of last year, I read an article on LinkedIn that says data scientist is the sexiest job in the world right now. And then just last week, I read an article also from LinkedIn saying that data science dead in 5 years or less. So for that is, this is very short-lived problem. And for me, the reason for that is right now, people are really have a high hope, what's the real challenge for me is managing the hypes and the hopes and the myth of artificial intelligence and data scientists itself. And therefore managing that to the partners, managing that to the board holder, managing that to the shareholders. So all of these are extremely crucial, and HR is important, but understanding the practical, what they can deliver, what it is for, is much more important.
That's a very fair point, right? Data science is actually a science, it's not God. So, I mean, keep your expectations accordingly, right? Sharon, what is your key, what is the key challenge, or what's the key issue that you think?
Yeah, well, I think, I guess the reason why I picked cybersecurity will be because it is actually one of the areas that we focus a lot in SWIFT and with our industry. So as the industry innovates, digitize, that is an area, cybersecurity has to be embedded in everything that you do, right? The cybersecurity is actually in the DNA of SWIFT, because we are actually managing a very critical messaging infrastructure that every 2 to 3 days the value of the world GDP goes across our network, and we're supporting basically 11,000 market infrastructures, financial institutions and corporates. So it is very key to us, and now it makes sense for us to have a natural extension and providing that support to our industry as well.
I mean, the $6 million hack that happened by one of the Russian lenders, I'm sure, I mean, the network by itself was secure, but how do you deal with the endpoints and the vulnerabilities for your clients?
So yeah, I mean, as I mentioned earlier, we've been operating this for over 40 years, and there's definitely no breach or no compromise on our network. The incidents that we've seen so far is really at the endpoints itself, and that's why we came up with the customer security program, really looking at three areas. Is about you, the bank. How do you protect and secure your local environment? Your counterparts, how do you prevent and detect any fraud? And lastly is really about the community, right? So how do you prevent future attacks through sharing of information?
Absolutely. I think I'll have to agree with that as well. I mean, Cisco shared the number of attacks that they prevent every day is higher than the number of Google searches that happen in a day. I mean, you can well imagine how vulnerable we are to a cybersecurity, to a cyber attack, right? Klaus, what would you pick?
So 77% of the world's transactions run on SAP platform. So my biggest worry is that SAP systems cannot go down, because otherwise the world will go down. I think combined with the fact that we obviously want to service our customers in a way that they can continue to disrupt their business model using technologies. So out of the options you provided, disruption with technology is one of the areas that stay very much in our focus, and manage it in such a way that it becomes an opportunity and not a threat. I guess you had another one that was on the list regarding talent capability, and just to add to it, the technology is there today. It's not a lack of technology. There's plenty of great technologies out there that you can buy in an affordable manner. May that be SAP or some of the great solutions we are working with. I think the part that is obviously creating the magic is if you have the technology and you add the right skill set. And in the region we're in right now, we obviously need to continue to foster the right IT skills capabilities. There's some great initiative that SAP has done in Africa, where we actually have trained 500,000 young students on coding, a simple skill, but a very useful skill as you immerse yourself into your future career. Similar thing we have done here in ASEAN with the ASEAN Data Science Explorer competition. 5,000 students just equipped with some basic data analytics skills. Data science maybe not be that hot, but still there's a lot of students who would like to get into the competition.
Actually,
so I think
the Singapore companies that were polled during the expo last year, this came up as one of the key issues that they have been facing. Not just data scientists and data engineers, but even management within technology has been one of the key areas that companies are kind of challenged with. And they're trying to, I think immigration laws play a huge role in that. And I mean, we're kind of hearing some new immigration rules that might come up in Thailand. So that's another area to watch out for. I'd very much like to see what the audience thinks is the main challenge and what is keeping them awake at night. Could we please see the results on that? Here you go, Klaus, again. I think he has the best feel for like what the real businesses are kind of struggling with. So to that point, I think in terms of business disruption, it will be very interesting to kind of look at how Charles Schwab took this as an opportunity, you know, like the key idea is to disrupt yourself before your competition comes and disrupts you, right? What are your thoughts around that? Like, how are you helping the companies to disrupt themselves?
So what we do with most of our companies around the world, and that's approaching more or less 400,000 right now, is helping to imagine how the future would look like for them. Try to get them out of their comfort zone and give them the art of the possible. What we try to work with now, not only define best practices. We have been here for 4 decades plus. We operate across 25 industries. We know very well what are the best practices. But our obligation as SAP, given who we are and our history, is actually to define the next practices. So that's what we spend most of our time with our customer around, try to give them a perspective of what could the next practice looking around enable with this intelligent enterprise that we can offer to our customers now.
Awesome. I think we're almost out of time, so I just want to leave the audience with one key thought. The reason why human beings went up the food chain was not because we had the strongest teeth, or because we had the strongest bones, or because we were bigger, but we were able to tame wildlife, which was much bigger, stronger than us, because of our intelligence and barely on our ingenuity. Would the machines that we have made and we have created, do you think at some point in time they could have the same edge over us? Just something to think about. Thank you so much, guys. It was really, really interesting talking to you, and I'm sure the panel had, the audience had a good time kind of getting your insights on some of these key challenges and key issues that they're facing as well. Thank you, guys. Thanks a lot.
Ladies and gentlemen, we've come to the end of today's discussions. It's been a day of contemplating how best to position Southeast Asia for the future. We've touched on everything from the fourth industrial revolution to cybersecurity to the changes in trends in tourism. We do hope that you found the conversations engaging and insightful. Now, before you go, I would like you to fill in the feedback form so that we know how best to perhaps make the next session better, the next event better for us. We would really appreciate that. And on behalf of Bloomberg, thank you for sharing the day with us.